Hi guys, welcome back to another lecture. So we've made significant progress, I like to think. So for those of you who have been following the series for a while and also following the channel, you know what we're doing, you know where we are, you know how we're thinking. For those of you who are new to the channel, this is where we cover everything to do with market profile. So if you've been looking into it, you are completely new to it, you just popped on this video randomly, this is a place for you. You can go back to previous lessons because again, this is quite far in. I believe we're somewhere around lecture 22 currently. So it's quite a lot to cover. So I would certainly advise go back to lesson 1. The playlist is already linked, so you can look at that in the playlist section, or which will be visible on the top right hand side of your screen, or you can go to the description below. You'll also see the playlist and also how to get to the other lessons. I post these regularly on my Discord server, so the link is in the description below. So again, pop into the Discord server where I put a ton of information, not only just information on trades, macro perspective. I do a lot on the Discord server. Again, this channel's been going for a very long time, pretty small channel because I largely cover market profile and professional ways to trade. I know that's not widely covered on the internet. So again, I'm not expecting you find me just by a YouTube search. Naturally, YouTube doesn't promote me as much just because I don't do the kind of videos that often garner attention and maybe even that YouTube likes to see. I'm more about value. The channel is growing. It has been growing a lot over the past year just because there's been a ton of podcasts with professional traders who are using market profile. And for a lot of people, that has drawn them to my channel. I don't believe there are too many channels like myself at the moment on YouTube doing this. So I've made a considerable effort to do this as a lecture series so you can get real value all for free. Again, if you want access to, say, for example, my TPO tool, I've put a link in the description below to the Discord server. Sign to the Discord server, you can DM me. Again, TPO, as we know, is like really, really expensive. I'm sure if you've ever looked into getting a TPO chart, you understand what I mean. It's like super expensive, really, really difficult. I coded this obviously for my own personal use. I've extended that to public use. For anyone who wants it, it's available for MetaTrader 4. It's not available for MetaTrader 5, and that's because of the way MetaTrader 5 is kind of built. Right? Obviously, MetaTrader 4 it works perfectly. It's going to be around for a very long time. Almost every broker has a MetaTrader 4. So if you need to use the TPO on MetaTrader 4 and execute on a different platform, then you can do that. I know how it can be. A lot of traders are very pedantic about, what platform they use, and that's not a problem, but there's also no problem trading with MetaTrader 4. So if you want to trade directly from the TPO, you can do that. I like to think this is really well built. I built it on the basis of thinking around CQG in mind. I'm aware not many of you would have used CQG as a platform, super expensive, but if we're talking about cost, to get access to a basic TPO market profile, you're looking at no less than, and that's from all the major platforms that you might know, TradingView, Sierra Charts, you're looking at less than $40 to $50 a month at the low side. At the high side, you're looking at anywhere from $200 to $400 a month, basically. So it is not cheap, right? And for me, what I'm providing here, I like to think is like incredibly cost effective for you as a trader. In my case, you have a one-time license and it takes you pretty much forever. It's lifetime, right? And I think this is important because it allows you to have access to this and actually do your business in the way you need to do it. In these lectures, I teach you how to do that, so there's no qualms on how to do it. And I do make a conscious effort to show you trades that I do In this lecture, we're going to talk about one trade. I don't only just show you trades that win, and in this lecture, we're going to talk about a trade that didn't go as planned, and we're going to talk about why and how we manage against that. Because the thing about it is you can't overanalyze a trade that goes wrong. If a trade goes wrong, it goes wrong. And all you can ever do is say, okay, I traded it wrong. I think I know why, but it's okay. On to the next trade. If you overanalyze it, essentially you're saying to yourself that you don't ever want to take a loss, and that's an unrealistic expectation. In fact, in most cases, at least a good 40, even 50% of your trades are not going to work out. So obviously having that good money management, that disciplined money management, it's not like people don't know they need to make more money than they lose. It's just the discipline to have a system that they can use repeatedly and it will continue to occur, right? So again, we've spoken about this in previous lectures. It's about occurrences. A system that doesn't repeat often is not a good system, right? If it repeats every God knows how long, you're not going to be able to build an expectancy around it. So having a system that repeats often allows you to build an expectancy, so you can see the probability of that system being right versus being wrong, and that's how you can start to develop that risk reward potential. There are other factors like volatility. How volatile is the asset that you're trading? And I've got videos on this channel that tell you how to pick an asset to trade. I don't cover that in the market profile series, but definitely if you look at my other videos, you'll find that I've covered this before. So again, if you're wondering how do I trade an asset that's volatile, which one do I pick so I can get that decent risk reward, I show you how to do that, because that's another thing that's lacking. Traders don't know how to pick. I've heard a ton of arguments around time frame. Again, for me, it's quite simple. You go granular on the time frame in order to capture more volatility. There's no other way to look at it. If an asset has very low volatility, which is very common in FX, for example, if you're trading something outside of cable or euro dollar, you might find assets that are incredibly tight in terms of range. If you want to trade those assets, you need to trade them on a smaller time frame. Unfortunately, you don't have a choice, right? Otherwise, you're not going to be able to make the kind of risk reward potential because the asset is very low volatility. So all these things I teach you on this YouTube channel. I hope this has been a very good sort of entry, especially for newcomers, for people who have been on the channel for a while. You get what I'm about. Okay, moving on. Today we're going to talk about a few more important aspects of market profile, plus also cover the trade element. Right, so the last video or the last lecture, I spoke about being in a position in gold. So again, we were running through this and we were talking about the initial draw on stops, which occurred here. So we traded over the high of day. This is a daily profile. And then we pulled back, and then you can see over this day, we dropped to the low and we took out the sell stops that sit below the J period low, and then we rallied, right? So I wanted to be long, right? This wasn't the ideal trade, because again, if you look at the time, it was about 1 p.m., which was on news information, and that was the risk on the trade. I've always said realistically that you're looking to trade high volume out of, say for example, the Nasdaq Open. In fact, on this day, the highest volume of the day, if I'm not mistaken, was the Chicago. Let me have a look actually, make sure that I'm spouting the right piece of information. So the date was the 3rd of July. So again, I'm just going to use the tip volume at the bottom. So again, the TPO aligns only with the price scale, not with the other MT4 stuff. So I need to find the 3rd of July, which is right here. And I can see the highest volume was on the Nasdaq, right? So again, we pulled lower, right? So the highest volume was on the Nasdaq, so that's fine. And we pulled higher, right? But the low of day, we've got a poor low, right? So the low of day is not posting the highest volume, right? And I've spoken about this before. If you're completely lost, please just go back to the previous lectures. I covered this. In fact, I have a professional trader program free here on YouTube, which actually covers volume in depth, right? So I'm not going to go over it again. If you haven't seen that one, just check it out. So ultimately, you can say that we've rallied, we drew on those stops, and we closed back into the range. From here, we want a long, stops below the O period low, or you can even hang them below the P period low, right? Because to be perfectly honest, the Nasdaq Open should really go. If we start trading back down there, then expect this to go lower. Again, you can see this rally into Asia, so it looks good for a little while, but you can see that the sellers at the top of the O period were going to be that problem. And I've told you how we can map that, what that looks like, so that we're always aware, we're consciously aware of where the market is trading and where the big players are positioning. Again, you can see we go up there, we struggle, and then we break the balance today in the Asia Open, and then we start trading lower. So if I split this rotation, you can see that here. Where am I expecting this to go? Well, definitely into the bid stack for sure. That's 3290, 3277 range on gold. Fair price obviously is the best place to kind of aim for, and then we should see a reaction at the bid stack, right? So again, let's take a step back. Right, this is why we wouldn't have shorted this, right? So for example, when it broke, I wouldn't have necessarily wanted to be short unless I was trading a smaller time frame. So if I was like in a 5-minute chart and I've seen the day period come back and trade the responsive buyers here, well, I'm aware that they're probably going to be stops sitting above the low, and that could potentially trigger a rally. I don't know, I have no idea. Even if I have more advanced tools, DOM, depth of market, order bubbles, whatever it is, it wouldn't really make a difference, because what have I always said about stop losses, right? Stop losses are hidden market orders. That's all they are. They're just market orders that only the counterparty knows where they are. So when I say counterparty, I mean intermediary, a broker, for example, or a market maker that's received these orders, and they're the only ones who know where it is. So if this information has been sold to larger entities, it means they can place orders in real time against that available supply. So for example, if there are, and I've explained this before, but I'll go over it again. If there are, at the bottom here, there's sell stops, right? So if they're going to be sell stops here, it means that people have orders to sell to someone else, right? And if you have an order to sell, someone's going to be a buyer, which is perfect if you're a large entity looking to get a lot of volume and you don't know where to find it. Because most people are going to have stops no matter what position they have. If they're long here, they're going to probably have stops here. If they're long way at higher prices, they can have stops down here. If they're really just entering into the trade, they can have stops down here. So for every single trade that's out there, maybe 80% of them have a designated area where they wish to exit the market, right? And even if they don't have a physical stop in the market, they might have an algorithm or system that can bring an order alive as soon as that price level's hit. So between stops that are in the hands of the broker, the market maker, and stops that are in the hands of traders, i.e. in the form of stops that are not necessarily placed, they're going to be placed as market orders when that price level is reached. Right, so there's going to be a lot of market orders generated, and there are lots of them are going to be buy side because someone has to take the other side of those sell stops or those potential sell orders. I hope this is making sense, because what we're going to see from that event is stop triggers, lots and lots and lots of stop triggers, and that can drive the market up. And because they're not visible, no one can tell you for definite that's what's going to be happening here. The only way this doesn't rally when those get triggered is if there's essentially not enough buyers. And it's very possible there might not be enough buyers. The market might trade down here, not find enough buyers, and then continue lower, which is what we're seeing in gold. But it makes it a risky proposition to be short at that point, because now you're gambling on the fact that there isn't enough buyers and you don't know that. So I always say to traders, don't be short in a hole, right? If it's gone and your initial position was a long and it's broken against you, what you've witnessed here is the buyers being unsuccessful. But now you're trading a break. And that's not what we're trying to do. It's a position, you can take it adds risk to the trade, and if you can build a risk model that factors that in, that's fine. But from my experience, you're going to be wrong more times you're going to be right? And a lot of people do trade that way. They wait for things to break and give way, and then they think of a position. They don't have a model to decide that actually, no, I can see what the market's doing or what it's about to do, and I'm going to try and position in line with that. I teach you that here, and that's what I'm trying to communicate. So one, I wouldn't have been sure. So just for transparency purposes, that's what the trade looks like for me. So you can see this is my deal map. So you can see this little red thing here is an expression of that trade where I was long, it was going well, and now it's against me and it stopped me out. What do I do after that? Do I revenge trade? No. Do I chase the trade? No. As you can see, I've got no trades, and what I'm waiting for is for the next reaction. Right, I'm also looking at other assets. I'm looking at gold. Obviously, gold, that was the position. I might be looking at cable. I might be looking at the agri commodities, corn, for example. I might be looking at other things that I might think have more viable opportunities. But as far as my trade goes, this is it. Now, everyone who's been on this channel knows that I'm about 90% of my trades are cable trades, right? I trade the pound. That's my dominant asset. But every now and again, I'm going to see an opportunity in another asset that I've been exploring, and I'm going to take that opportunity, but all within my risk rules. So, for example, if I'm long gold, let's say my entire plan this week is I'm not going to risk more than, let's say, $4,000 or $5,000 on trades, right? I'm not going to risk more than that. That's my max risk point, right? So that's my allocation. And then I'm trading my usual asset as normal, doing my business, and then something like this shows up on gold. I can easily calculate, okay, how much risk do I want to allocate to this based on what I think it can do potential-wise, and then I'll put that trade on, right? And I can still go on to do my regular business. I don't need to change what I'm doing. I'm just seeing another opportunity I want to explore. If it doesn't work out, great. I scratch it off on my accounting book and say, hey, all right, that didn't work. That's a straight loss, and I'm done. If another opportunity shows up, if it's worthwhile, I'll go for it, or I'll just continue doing my regular business. So again, I'm not advocating don't trade a singular asset, because some people are like, I can't trade multiple assets. Okay, there's no right or wrong. Risk management is the most important thing. If you can develop a trading model that allows you to express your idea into the market, into different markets, then perfect. If you can't, you don't, then stick to the market you're at. So if I was consistently trading gold, I'll be taking all the opportunities I can see, and I don't see everything. Sometimes there are things I don't say, but I make money. I'm doing my business. I trade for a living. This is what I do. So I don't do anything else. So I have time, but I also don't want to waste my life in front of a screen. As you can see, I do this lecture series for you guys. It takes me about 40 minutes, an hour sometimes, and that's done. I can pull away. I've traded within my own trading time and session. I've spoken to in these lectures about how I trade, what I do, and so on. But what I'm teaching you is essentially what I do myself, and that's why I'm showing you these trades. It's not, it's not a boast for the trades that I've showed you in previous lectures that have been winning trades. I'm also showing you trades that live so you know how to manage them. If you don't understand how to deal emotionally with losses and manage the positions, then you're not going to be good at this either. It's going to be a challenge, because there's just going to be too many losses if you're consistently trading. Obviously, opportunities like this, they're more one-offs, right? If this worked out, it would have just added to a potential P&L, right? And I've had to take away from something to make that trade. So it's a little bit different. If you're trading an asset continuously and you're following what I'm teaching you, you're going to have losers like this, but you're also going to have some great winners. And that's what I've been exploring. So again, if you're trading primarily gold, you know how many winners have been in gold? It's been insane. I mean, this would have been a nice short trade for you coming back in. This would have been a sell opportunity, and you would have been able to capitalize on that in about 6 a.m. London. And it didn't matter if you were late, if you were coming in a little bit late, actually 8 a.m. London, so London opened. That would have been a great opportunity, and this would have been a crazy move. If you're trading it in a smaller time frame on the intraday, it would have been bang for your buck. I mean, let's just express this for a second. You would have been short anywhere here, the entire trade to the low to run the sell stops was, what we're looking at, 30 points, right? So you got 30 points, right? And your risk on this trade would have been maximum 10 points, 11 points, if you follow what it is I try and teach you. Think about that for a second, right? That was a stellar trade. It's 300% return, 3-to-1 risk reward. It's a 300% return on your capital, right? I like to talk about things as well in terms of return on capital, right? So capital allocated, what did you put towards the trade and what did you get back? So the opportunity is there, it's undisputed, but you're going to get trades like this. But look how tight it is, right? I wasn't over the moon. I wasn't like crazy out of pocket with risk, and I'm disciplined enough not to keep this trade, and I'm disciplined enough not to come in and revenge trade, point in case. Now, there's a lot of things you can do as a trader to help you with the emotional side of things. I mentor a lot of people, and again, shamelessly, I would say that anyone who's looking and has been struggling and they need that help and they feel they need to reach out, Discord servers in the description below. Right, it's got no excuses. At the end of the day, there are a lot of people who sit down and say, "Oh, I really want to trade. I can't find people to help me. I don't know any professional traders." Well, hey, you're lucky there. Right, I do it for a living. I've helped many traders inside of my Discord, people who maybe will come into this for the first time. I've done it for years, right? And I like to think I change their life, or I helps them turn something around in their trade. That's you want to reach out, you're more than welcome to. Again, different discussion, but at the same time, that option is there. So I'm not just a guy on YouTube. You can actually talk to me. I'm a real person. Anyway, moving on. So that is the point I'm trying to make, is that we all need to be disciplined. If you want to know how to be that, right, sometimes it's in our personality. There are lots of personality type tests that are really good ones. Like, even when I work with clients, one of the things I do is I get everyone to do a personality test. I think it's important because then I know, like for example, I'm an INTJ. My analytical skill is second to none, basically. It's why I'm in finance. It's why I've spent most of my adult life in finance. Now a trader. I've been trading in markets for now up to 17 years, a little bit, and I've been like solidly professional since give or take about 10 years, where I am. It's my predominant business, right? So because of my own trajectory, I can tell you, based on my own personality, that this was the only kind of job for me beyond, maybe being a developer or something like that. My analytical skill is second to none, right? I'm super good at analysing stuff and seeing a big picture and a small picture all in the same frame. It's why I gravitated to market profile, for example. But I've also worked with people who are not INTJs, and the way I design my education, my videos are all based on the fact that I'm an INTJ. While some people are more about organization, right? They care about that aspects of things, and everything needs to be broken down and very systematic. So it's a personality thing. There are ways to find this out, and this will make your life easier. I'm a big believer in the stars, right? We're all made of stardust. You'll be amazed. And I know not everyone's open-minded, and I appreciate that's fine. You'll be amazed what you can find out when you understand your star, your own zodiac, right? Where you really get this at a very deep level, maybe even down the Vedic route. And it is what it is. You are going to find out a lot about yourself. You're going to find out about, where your greatest potential lies, especially when it comes to investing in markets and stuff like that. So understanding that too also helps you understand how you need to position yourself. If I take myself as an example, discipline is a core part of my success. For me, without discipline, there's no success. Can you imagine that? Knowing that if I don't discipline myself, if I don't fully commit myself to a cause, I ain't going to succeed. It's why I opted to be a full-time trader. I could have kept a job on the side and been a trader at the same time and struggle through it and have to trade every other day, or convince myself the only way forward is just longer time frames, blah blah blah. Day traders lose money, blah blah blah, or intraday trades are like least successful, all kind of bullshit that people put out there, right, just to convince themselves that they need to hang on to a day job. But for me, it would never have worked out. So making that change allowed me to be able to be where I am and do what I do and be able to make these videos for you today, is because I opted to be a full-time trader, and it would change my life dramatically if I'd never made that shift. And it's not a money thing. Not going to talk about that. Money's not a factor, right? Most people have been working for years. They've got savings. Most people looking at trading probably have a decent savings kit. It's not that they can't make the transition. It's just scary, or it just doesn't feel responsible. or they might not get the support. But all of these things are written in your stars. Trust me, guys, they are. And if you know how to get to that, you'll be able to unlock a lot of potential that is kind of locked up. And it will also help you understand that maybe this isn't for you. Maybe it's time to look at something else. Right? Maybe this is not where you succeed. I don't know. Right? But these are all ways to help you build the kind of fortitude you need to keep persevering and doing this and actually making it work. Anyway, spoken a lot. Thank you very much for listening, guys. I like to have these conversations because I believe I'm talking to real people, not just bots who do the views on these videos. And again, a lot of you don't, even on the Discord, you don't get to talk to me, you don't get to hear my opinions, we don't get to have these conversations. So just imagine that I'm sitting across the table from you and we're having a chat about markets and trading, right? It's not just a YouTube video. That's why my channel is what it is, and that's why it's so difficult to find, because I will have these conversations with you. And think of it like my free mentorship towards you. I'm mentoring you right now, right? So the bottom line is that you can do it. That's the bottom line. You can do it. It's just depends, right? And there are tools and ways to look into your life that will help you get where you need to be, and it will help you build discipline and what it is you need. All right, back to the asset. Thanks for listening again. We've been talking randomly about everything that you need, I think, to make the leap. This lecture's largely been about that. It's been 30 minutes in, so let's do some work. Right, so again, just having that conversation about being short in the hole. Now look how this asset's behaving. Right, imagine that you'd opted to be short because you saw the break or you lost a trade. It would have been disastrous, right? You're going to lose another trade, most likely because this thing could just rally, right? We don't know, but that's a possibility. I'll pull this profile in, we can see what is the semblance of a bid stack forming. Right, if this continues to break higher, then this would have been a clear stack, and then we start to rally. Or we could just open up, which follows my expectation, and then we can just drift lower over the course of today and tomorrow. Possibility. Or it could just be a ton of volatility and we sell the day exactly where we are right now. There's so many possibilities, so we've got to trade with those in mind. Moving on. Right, so we've seen the trading gold. It wasn't gold I wanted to talk to you about tonight. So we've covered before weekly profiles, we've covered before daily profiles, and we've covered a lot of assets. Right, so we're going to take a step back and we're going to look at where things are positioned on these frames. So we're going to use cable. So if you remember, going back now about a week, right? So these are weekly profiles. Going back a week or two, we expressed these trades. I'm going to delete some of these off now. What was our saying? We said this was a higher week on a weekly chart. That was a higher week. Any pull through that higher week would lead to a run on long-term stops. We did say that. And if we split this rotation, we see that evident here is that we initially pulled through K period, consolidated, broke, did a solid run, and then continued higher. Now, of course, we know we don't want to sell. Right? We're looking at a weekly profile for our rotations. We don't want to be short until we can see the market closing back under the range, which would be here. See that the red line there, that's the range. Right. Here we can see there was a bid stack against the week, so we know the market's going to struggle at this level, which we did, and we rallied briefly, because this is an entire value area run. But most importantly, we traded the higher week again and drew on stops. So mostly what's happening is we're going up, drawing on buy stops, coming lower, and then trying to rally. Right, so for those of you who were following me, what did I say when we had that IJ period run on the stop losses here? I said, look, this is it, right? So we could be shaping up for that big run. So this was the trade, let's say a swing trade, back to the bid stack. And then we hold on wait. Now what do we want to see? We want to see that now we're under, right? Price is trading under this level. As soon as we start to pick pace lower, we can anticipate that we're going to this bid stack here, and that's where the market's going to draw to. It's within the natural range, right? So that's the range the profile can do. We've spoken about that before. It's 82 pips now. Some of these profiles can easily do 220, in this case 400, 239, 175, even on consolidations. 178, and then when we talk about big money rolling, it's 280. So we're looking at least 200 pips that we can see, because this is not setting up for consolidation right now. We've seen an imbalance test. This might be another imbalance, or we could float into balance, and that's at least another 170 pips. So either way, when we come out of the initial balance, which we're more than likely to do, you can see consistently it's a repeated affair. And this is one of the reasons I say the initial balance is really important. We've seen a repeated affair of initial balance breaks. So we've had a breakout the initial balance, double, breakout the initial balance to double. On consolidation days, we've had half the initial balance, so at least 0.5 out of the initial balance on both sides. And even when we get wider balances, we're looking at 0.2, 0.3 outside of the balance. So there's an expectation that we're going to do at least on a consolidation, at least a 0.5 out the side of the balance. Arguably, I would say it's a good chance for a double outside of balance. So at the very least, we can easily measure that and say we're looking at 178 pips. We've done 82 of that at the moment, so there's probably another 90 pips left in here, right? Which puts us about here. And that's the minus development on this week. Again, minus development, single print within the value area, initiating buyer in this case. So we can see that E period 20 here. So that's at the very least. If we continue the rally, let's say this week we reclaim the open, so this price struggles at value low, which is an advantageous price at the moment for weekly players, and then it rallies and breaks the initial balance high, right? We're looking at value high at least, and that might mean even a retest of the high, because now we have a new set of stops here, and if we're going to keep going higher, then we're likely to break the highs. And my opinion has always been we need to probably see 140s in cable before we ease, but for now it looks like we're setting up for at least a drop to the low, with the potential as well to run the stops at these lows. Now I'm not expecting that, right? Because we first have to overcome the bid stack, but let's say, right, and there's another bid that's stacked down here. I'm not expecting that at the moment, but it's a possibility that we're going to go into the 144s. Right, the other clues we can deduce, for example, we've got gaps in value, which take us to 144.31, and then that's when we start to load up on bid stacks. This is a daily profile. So we can already see that we've had a break, consolidation, the minus development has supported this market. You can see the O print, and you can see the struggle, you can see the neutral profiles, which imply we were consolidating, and these are, we thought this was a bid stack, we thought this was a bid stack, now we've broken the entire block. We're trading lower. We've initially done today a sweep of stops at P period low, but we also have the R period low. This for me is not a reliable rally. We also have another problem. We're outside of the NASDAQ frame. We're seeing a rally in 10 a.m. Unusual activity in M period. Right, so we bid lower, rallied. Is this sustainable? We'll have to say as we come. This is right now we're coming into New York Open. We have to see how this asset behaves. Close of New York into the NASDAQ Open, which will be 10-11 hour, right? And that will be telling, right? That will be telling. Because again, if we break the NASDAQ and we start printing out the M period low, then we're going to expect some continuation, and then we have to seriously start to consider the R period low. Are we going to get a draw there? Is this going to be in Chicago? What's going to happen, right? Or we could keep rallying and then attempt to split this profile, is attempt to make a draw on stops here, right? So these mid-range stops, or we could go for the high, which is what I like to see. Right, my opportunities tend to come from these sort of places. I don't like the mid ones, but again, if it's really decent on the NASDAQ, I will consider it. Then obviously my trifecta, volume, liquidity, time, I would need to see that line up. I would need to see the volume match the liquidity, and of course the time being the NASDAQ. Really simple, guys. We're not looking to overcomplicate it. Right, so we can see that comparison. And if we drop here, we can see what that would look like if we were to play out the way I'm thinking. Because if we were to start to grind lower, then we could start looking for extensions. And then we could start to alter what we think about it. Strong NASDAQ close, we can look for a pullback, stops above the NASDAQ high, and we can look for an intraday extension. But these daily profiles, as you can see, we can have some decent extensions, but right now we're a little bit overcooked. So the selling has to show up from higher prices. So let's see how the NASDAQ plays out. Right, but what's clear to everyone at this point is that we're building offer stacks up here. And this is going to present a level of resistance at this point. So any rallies back into that stack is where those sell opportunities need to be. And that means that the likelihood of us going too high is actually really slim. We should start to see selling come back in quite shortly. Of course, it requires now a lot of skill. When we're trading in these kind of positions where it looks like we're at the start of a bigger move in a longer time frame, we have to be able to make that deduction. And that's what makes us traders. But what's giving us some hope? We've got a massive gap that needs filling. We could even fill that today, depending, or in any big event, this gap's going to get closed off. So there's a lot of sell side opportunity that can be multi-day running. Again, we've seen a similar example here with crude oil, where we pulled those so we ran the offer stack, took the stops above the 8-period high. That was high of day, it's a daily profile, and then we moved lower into bid stack. And now from here, we can see the rally from the bid stack, and now we're going back up. Well, we can anticipate quite easily we're going to most likely clear the highs. So again, if we roll this up here, we're looking at those G period highs for clearance. Again, you can see this was a strong sell on crude. Recovering this is not going to be easy, and that volatility's definitely got out. You can see that it looks very much like a consolidation higher. My long-term expectation is $55 crude. We'll come to that, but for now, let's see where this goes. I hope this made sense. It doesn't change. You can trade any asset with a TPO chart and be able to position correctly. And I give you just a few ways to do that, and a lot of you have seen that through the lectures. It doesn't change. Let's make a pivot to the shorter time frames. So again, we discussed this and we're looking at this with cable. Let's say this is 5-minute rotations, 1 hour profile segments. So you can see that pull. And if you just open a window time, so we can see this was the London Open, right? We're trading lower, and we're dropping in to the low, right? So if we stretch this out, that's the low right here. And you can see that draw into that low and that pull back up, right? A close here. So if we were considering long, what would that look like? Select these rotations, right? So we can see the close up. We've always said this, we don't want to trade the close, it's too high. We want us to pull back, and you can see that minus development in K period, right? You can see that single point towards the tip. But we pull back into that, we know that we're big orders driving this, and that's probably where we want to get long, and then we might have stops back under that low there. That's a 9-pip run, or we can just have it under the J period low, or preferably under the K period low. Right? Adds a level of protection. If we're right, we ultimately shouldn't see these prices revisited. Again, we're the upper side of the value area, and you can see that extension there. 26 pips to 7, 8 pips, 8.4, or potentially 10 pips. So it's still a 2-to-1. At this point, you can roll your stop to break even, cover the cost, maybe about 2-3 pips to do that, and then you bob's your uncle. Now you're waiting to see if we get extension. If we look at the struggle that we're facing, where we're trading, we know that there's value highs up here, so it's going to present resistance for sure. There's a bit of stack of them, and we got here. So it's really difficult to keep tearing this market higher. That said, we could find stops here, about 136.25, or we could grind to the nearest offer stack, right, which we can see quite clearly is this level here, right? So we could retest that. Of course, any trading above that would imply more extension, and then we start looking at these highs to go. What can we see? Oops. If we zero this in, we can see that already we're offer stacking, right? So someone is trying to stop this market from going any higher. We've got higher value perception, so there's decent support at the lows, but to be perfectly honest with you, with this kind of price action, yeah, we start to make sure that we're carrying a level of protection. If we are right, we shouldn't see this market covering the low. But what else can we see? We can see a gap in value, right? So a gap in value on the segment, so it means that we're probably going to try and fill this gap. So this is a weak trade. We can already see that, right? We're 2-to-1 on it. We've got a decision to make. Do we want to take the trade into a US session and risk losing all the money, or do we want to walk away? We're already a 2-to-1 up. It's a weak position. We can see that. So despite what we've seen, A lot of things haven't added up. We've got our time trifecta out of kilter, which essentially means we're trading out of a major center open because it's 10 a.m. is not a major center open. It's pretty much after the London Open. We can also see that the London Open, we were bid short, and now the traders who were short at the London Open are now pretty much trapped in short positions that are probably break even or next to not, essentially not working out. So that's also, it's dimming out the short side, but it says that a lot of traders are in the wrong place, right? So trading from here is a weak position. So the time trifecta is not adding up. There's also definitely no volume trifecta here. We can see now volume is peaking, but at 10, there wasn't any volume for us to be excited about. And we can see that here. So we've got a volume tab here, 3454, 3999 was the highest volume. So we have a poor low. All right, so there's a lot of reasons why this is a weak trade. So two of the trifecta are not adding up. And then lastly, liquidity is the only one that's triggered, and that's what we're trading off. So it's a weak position, right? But on a 5-minute chart, it was tradable for sure, because you got this rally, you expect to pull back at least to the minus development. Value error was a possibility. If that had happened, this would have been a trade that you'd have to let go. All right, so if we traded under the K period low, it will be a damning indictment that we're probably going to come back under the level. Right, just the time was wrong. So there are a lot of things that you can quantify that makes you think, okay, I don't like the way this trade's set up. Okay, so we started the next segment, all right, so that's the next hour, and we're now looking to say what we do. So for example, if we break and we post an A period opening range, and then we break that on the hour, then expect this to start cascading. If we go higher and post an opening range and break that and go, then of course we're going to trade that level, which is where I would advise getting out of the trade. As we hit into that offer stack, you should be able to close the trade. That would have been a really good run that you would have were more than lucky and fortunate to catch, because that's not typically the trade that we would want to do. NASDAQ will definitely present a lot more opportunity. Anyway, guys, I hope you liked the lecture. I'm going to pause it here for now. Until the next lecture, guys. Adios. Look forward to seeing you.